Hey everyone, ready to finally understand ETFs?
We are doing a deep dive on exchange-traded funds today.
Exactly. We are going to break down 10 key points.
To help you figure out.
Yeah, if ETFs might be a good fit for you.
For your own investment strategy.
Right.
You probably heard all the hype,
Oh yeah.
but today we're going to go beyond that hype.
Beyond the buzzwords.
Exactly.
And really understand what makes ETFs tick.
How they work.
Yeah, how they work in practice.
The good, the bad,
Mm-hmm.
and potentially profitable.
All right, so imagine you love the flexibility of buying and selling stocks.
Sure.
But you crave the built-in diversification of a mutual fund.
Okay.
That's where ETFs step in.
Interesting.
They combine the best of both worlds.
How so?
Well, because they trade on exchanges just like stocks,
Okay.
but they hold a basket of assets just like a mutual fund.
Giving you instant exposure to a whole market or sector.
Exactly.
That's fascinating how ETFs have really democratized investing.
In what way?
Well, before ETFs even existed, building a diversified portfolio was very expensive
It took a lot of time.
and took a lot of time.
Right.
You would have had to buy individual stocks
Uh-huh.
or invest in pricey mutual funds.
Yeah.
But with ETFs, you can get that same diversification
Okay.
in one easy
Convenient.
and cost-effective package.
It's no wonder they've become so popular.
Yeah.
That makes total sense. So let's say I'm interested in the tech sector,
Okay.
but I don't want to bet on just one or two companies.
Right.
Could I use an ETF to spread my risk across the entire tech landscape?
Absolutely. Imagine an ETF that tracks the S&P 500 technology sector.
Okay.
Instead of picking individual winners and losers,
Uh-huh.
you're essentially buying a slice of the whole pie.
Gotcha.
If the tech sector rises
As a whole.
as a whole,
Right.
you benefit even if some companies within that sector stumble.
That's the power of diversification.
Exactly.
Okay, so I get the diversification bit,
Sure.
but how exactly do ETFs track a specific market or sector?
Most ETFs track a particular index,
Okay.
like the S&P 500 or the NASDAQ 100.
Uh-huh.
They do this by holding a similar mix of securities
Okay.
as the index that they're mirroring
So they're like creating a mini version of that index.
within the ETF itself.
Yeah, okay, that sounds pretty straightforward.
Right.
But what's stopping an ETF provider from just cherry-picking the best-performing stocks
Okay.
and calling it an S&P 500 ETF?
That's where transparency comes in.
Okay.
Unlike some investments that operate in a black box,
Right.
ETFs disclose their holdings daily.
Really?
You can see every stock or bond
Wow.
that makes up that ETF.
So I can see exactly what I'm buying.
This empowers you to compare different ETFs,
Okay.
see exactly what you're buying,
Yeah.
and hold those ETF providers accountable.
No more blind trust.
Right?
I like that. Now, another thing I've heard about ETFs is that they're really liquid.
Yes.
What does that even mean in the context of investing?
Liquidity refers to how easily you can buy or sell an asset. Think about selling a house versus selling shares of Apple stock.
Right.
One is much easier and faster than the other.
For sure.
ETFs trade just like stocks,
Okay.
so you can buy or sell them throughout the trading day.
Giving you a lot of flexibility.
Exactly.
So if I need to access my money quickly,
Yeah.
I'm not stuck waiting for ages
No.
like I might be with some other investments.
Exactly. You have the control to react to market changes
Okay.
or adjust your portfolio as needed.
And what about those various order types?
Right. Limit orders, market orders, stop-loss orders.
Yeah.
These give you even more control over your entry and exit points.
Okay. So we've got diversification,
Yes,
transparency, and liquidity.
I do.
What else makes ETFs so appealing to investors?
One of the biggest advantages of ETFs
Yeah.
is that they tend to have much lower fees than those fancy actively managed mutual funds.
Okay. I'm listening. Why is that?
It's all about how they're managed.
Okay.
Many ETFs passively track an index, meaning they're not paying a team of rockstar managers
Okay.
to constantly tweak the holdings.
Right.
This passive approach keeps costs down,
Yeah.
and those lower fees mean more money in your pocket over time.
I like that.
Yeah.
But hold on, doesn't that mean you're essentially trusting the market to do its thing rather than relying on a seasoned professional?
That's a great question.
Yeah.
And it gets to the heart of the active versus passive investing debate.
Okay.
Some investors believe they can beat the market
Right.
by actively picking stocks or hiring managers who try to do the same.
Uh-huh.
But historically, it's been very difficult to consistently outperform the market over the long term.
So you're saying that taking a passive approach with ETFs might actually be a smarter strategy for many investors.
It's certainly something to consider.
Yeah.
And keep in mind, even if you do decide to go the active route,
Okay.
ETFs can still play a role in your portfolio.
Oh, really?
Yeah, there are actively managed ETFs out there that offer a different flavor of investment strategy.
Okay, so we've established that ETFs are generally cost-effective.
Yes.
But what about the world of possibilities they offer?
Yeah.
It seems like there's an ETF for just about everything these days.
You're absolutely right. The sheer variety of ETFs out there is mind-boggling.
Oh, wow.
Want to invest in renewable energy companies?
Uh-huh.
There's an ETF for that.
Really?
Intrigued by the growth potential of emerging markets?
Sure.
There's an ETF for that too.
Wow.
You can find ETFs covering every asset class imaginable.
Really?
Domestic and international stocks,
Uh-huh.
bonds, commodities, real estate,
Wow.
even specific investment themes like artificial intelligence or cybersecurity.
So it's like a buffet of investment options.
Exactly.
I'm starting to see why people get so excited about ETFs.
Yeah.
But before we get carried away with all these options,
Okay.
let's talk about taxes.
Sure.
Are there any tax advantages to investing in ETFs?
One of the things that makes ETFs particularly appealing is their tax efficiency.
Okay, how so?
Let's explore how that works.
Okay.
ETFs are structured in a way that minimizes capital gains distributions,
Okay.
which can be a big plus,
In what way?
especially if you're investing in a taxable account.
So I'm less likely to get hit with a big tax bill just for holding on to my ETF investments.
Exactly.
Okay.
It's not that you'll never pay taxes on your ETF gains,
Right.
but the structure of ETFs tends to be more tax-friendly
Okay.
than some other investment vehicles.
It makes sense.
Of course, it's always wise to consult with a tax professional
Right.
to understand the specifics of your situation.
Good point. Now, before we move on to some real-world examples,
Okay.
I want to touch on one more crucial aspect of ETF investing,
Sure.
making informed decisions.
Right.
With so many options available, how can investors avoid getting overwhelmed
Yeah.
and choose the right ETFs for their needs?
It's all about aligning your ETF choices with your overall investment strategy.
Okay.
First and foremost, what are your investment goals? Are you looking for long-term growth,
Yeah.
income generation,
Uh-huh.
or a combination of both?
Right.
And how much risk are you comfortable taking on?
Yeah, that's a big one.
These factors will influence the types of ETFs that make sense for you.
So it's not a one-size-fits-all situation.
Exactly.
You really have to understand your own individual needs and goals.
Precisely.
And beyond those big picture elements, it's vital to research each ETF thoroughly.
Yes.
Okay.
What's the ETF's tracking methodology?
Right.
How has it performed historically?
Yeah.
What's the underlying index or asset class it's following?
Okay.
And what's the reputation of the fund provider?
So it's like choosing any other product or service. So you
Good.
do your homework before making a decision.
Precisely informed decision-making is key to successful investing.
Okay, so we've laid a solid foundation here.
Well, yeah.
We've explored what ETFs are, how they offer diversification, how they track indexes, and why their liquidity, cost efficiency, and tax efficiency make them appealing to investors.
All important factors.
But I'm itching to see these concepts in action.
Okay.
Are you ready to walk me through some real-world examples of ETF?
Absolutely. Let's bring those concepts to life by looking at some specific ETFs
Okay.
and how they might fit into different investment strategies.
Great.
Yeah.
All right, so let's shift from the theoretical to the tangible.
Right.
You mentioned real-world examples of ETFs.
Yeah.
I'm ready to see how these things actually work
Oh,
in someone's portfolio.
so imagine you're an investor
Okay.
with a long-term goal of a comfortable retirement,
Right.
and you're okay with a moderate level of risk.
Mm-hmm.
Where would you even begin with ETFs?
Well, I remember you saying that ETFs are great for broad market exposure.
Mm-hmm.
Is that where I should start?
It's definitely a popular choice
Okay.
for
Yeah.
a core portfolio holding something like the Schwab Total Stock Market Index.
Okay.
Ticker symbol SCHB could be a good fit.
Okay.
This ETF tracks the Dow Jones U.S. Total Stock Market Index,
Uh-huh.
which includes a vast range of companies across different sectors and sizes.
So instead of trying to pick individual stocks,
Right.
I'm essentially capturing the growth potential of the entire U.S. stock market
Exactly.
with one investment.
It's like casting a wide net
Okay.
and letting the overall market tide lift your portfolio over time.
I gotcha.
But of course, we don't want to put all our eggs in one basket,
Right.
even if that basket is the entire U.S. stock market.
Exactly. What else might we consider?
Well, you've heard that it's important to diversify globally,
Yeah.
right?
Doesn't that mean venturing beyond U.S. borders?
Absolutely.
Okay.
Adding international exposure
Yeah.
can help reduce your portfolio's overall risk
Okay.
and potentially enhance returns.
Okay.
Think about it, some of the world's most innovative companies
Huh?
are based outside the U.S.
That makes sense.
Yeah.
So how do I tap into those international opportunities with ETFs?
An ETF like the Vanguard FTSE Developed Markets ETF.
Okay.
Ticker symbol VEA could be a solid choice.
All right.
It tracks a broad range of stocks from developed countries outside the U.S.,
Okay.
like Japan, the UK, and Germany.
So now I've got U.S. stocks,
Right.
international stocks.
Uh-huh.
What about those bonds
Okay.
we talked about earlier for stability and income?
Remember that Vanguard Total Bond Market Index Fund ETF
Yeah.
with the ticker symbol BND?
Uh-huh.
That's a great option for broad bond market exposure.
Okay.
Bonds tend to be less volatile than stocks,
Right.
and they can provide a steady stream of income
Yeah.
through interest payments.
Right. A nice counterbalance to those sometimes unpredictable stock markets.
Exactly.
This is starting to look like a well-rounded portfolio.
Yeah.
But are there any other types of ETFs I should consider?
There are so many possibilities.
Okay.
But let's say you're particularly interested in the future of clean energy.
I am.
Okay.
What then?
There are ETFs
Okay.
specifically designed to track companies involved in renewable energy technologies.
Right.
You could explore the Invesco Solar ETF,
Okay.
ticker symbol TAN,
Okay.
which focuses on solar energy companies.
So if I'm optimistic about the growth of solar power, I could invest in that specific theme through an ETF.
Right.
I love how targeted these investments can be.
Yeah.
But with so many ETFs to choose from,
Okay.
how do you even begin to narrow down the options?
Remember those key considerations we discussed earlier?
Uh-huh.
Investment goals,
Yeah.
risk tolerance, time horizon,
Okay.
and fees. Those are all crucial factors
Makes sense.
in selecting the right ETFs.
And beyond those, you want to dig deeper into the specifics of each EPF.
Yes.
Okay. Walk me through that research process.
Okay.
What should I be looking for?
First, examine the ETF's tracking methodology.
Okay.
Is it replicating an established index,
Uh-huh.
or is it following a more unique approach?
Gotcha.
Next, delve into its historical performance.
Okay.
How has it fared during different market conditions?
Right.
Don't just focus on the past year or two.
Uh-huh.
Look back over a longer period
Okay.
to get a sense of its resilience.
That makes sense. Past performance isn't a guarantee of future results.
Right.
But it can give you some insights into how the ETF has weathered different market storms.
Exactly. And don't forget to investigate the underlying index or asset class it's following.
Okay.
Make sure you understand what's driving that index's performance
Right.
and whether it aligns with your investment beliefs.
Okay.
Finally, look into the reputation and track record of the fund provider.
Makes sense.
Are they a well-established player in the ETF space
Uh-huh.
with a history of transparency and investor-friendly practices?
It sounds like choosing an ETF is a lot like choosing any other product or service.
It is.
You want to do your research, compare options, and make sure you're comfortable with what you're buying.
Precisely.
Now, are there any red flags or pitfalls I should be aware of
Sure.
when evaluating ETFs?
One thing to watch out for is ETFs with very narrow focuses
Uh-huh.
or those tracking obscure indexes.
Gotcha.
These can be more volatile
Okay.
and less liquid,
Right.
making them less suitable for most long-term investors.
So sticking with ETFs that track well-established indexes is generally a safer bet,
Yeah.
especially for someone like me building a core portfolio.
It's a good starting point.
Okay.
And remember, always pay attention to the expense ratio,
Right.
that annual fee charged by the ETF provider.
Mm-hmm.
Even seemingly small differences in fees can eat into your returns over time.
Okay, so watch out for those hidden costs.
Right.
Now, I've been hearing a lot about these more advanced ETF strategies.
Okay.
What are some of the ways investors might use ETFs beyond just buying and holding
Okay.
for the long term? Advanced ETF strategies, huh?
Yeah.
Sounds a bit intimidating,
Okay.
but also intriguing.
So what are some of the ways that investors might use ETFs
Yeah.
beyond that buy and hold approach we've been discussing?
Well, imagine you're an investor who believes that
Uh.
certain sectors of the economy are going to outperform others
Good.
based on current economic trends.
So that's where a strategy called sector rotation comes in.
Okay, so instead of just holding a broad market ETF, I'm strategically shifting my investments between different sector-specific ETFs.
Exactly. Let's say you think the technology sector is ripe for growth,
Okay.
while the energy sector might be lagging.
Right.
You could increase your exposure to tech ETFs
Uh-huh.
and reduce your holdings in energy ETFs.
That sounds like it requires a lot of research
It does.
and a good understanding of economic cycles.
You're absolutely right.
Yeah.
Sector rotation is not for the faint of heart.
Okay.
It involves analyzing economic indicators,
Uh-huh.
anticipating market trends,
Right.
and being willing to make adjustments to your portfolio as those trends evolve.
So it's definitely a more active approach
Yeah.
than just passively tracking the overall market.
It is.
Now, what about using ETFs for shorter-term trading strategies?
Sure.
Is that even possible?
It is, but it comes with its own set of risks and considerations.
What kind of risks are we talking about?
Some ETFs are designed to track more volatile assets,
Okay.
like commodities or currencies.
Hmm.
Traders might use these ETFs
Okay.
to capitalize on short-term price swings.
So instead of riding the long-term growth wave,
Yeah.
they're trying to time the market
Uh-huh.
and profit from those quick ups and downs.
Exactly.
But that sounds pretty risky.
It is a much more demanding approach.
Yeah.
You need a solid understanding of technical analysis,
Okay.
risk management,
Uh-huh.
and market timing to be successful with short-term ETF trading.
So it's not something to jump into lightly.
Yeah.
Now, I've also heard about these things called leveraged and inverse ETFs.
Right.
What are those all about?
Okay.
Are they something that the average investor should consider?
Those are definitely more specialized tools
Yeah.
that require careful consideration.
So tell me more about them.
Leveraged ETFs use financial derivatives to amplify the returns
Okay.
of an underlying index.
Okay.
For example, a 2x leveraged ETF
Uh-huh.
aims to deliver twice the daily return of its underlying index.
So if the index goes up 1%,
Yeah.
the leveraged ETF would go up 2%.
Yes, but remember that leverage works both ways.
Okay. How so?
If the index goes down 1%,
Yeah.
the leveraged ETF would go down 2%.
Right.
Your losses are magnified along with your gains.
Ah, so there's a higher risk involved.
Yes.
What about those inverse ETFs you mentioned?
Inverse ETFs, sometimes called short ETFs,
Okay.
aim to profit from a decline in the underlying index.
Okay.
They move in the opposite direction of the index that they're tracking.
So if I think the market is headed for a downturn,
Yeah.
I could potentially use an inverse ETF
Uh-huh.
to hedge my bets
You could.
or even profit from the decline.
That's the idea.
Okay.
But it's crucial to understand the mechanics of these ETFs
Yeah.
and the risks involved.
Mhm.
They're typically used by more experienced traders
Right.
with specific trading strategies.
Well, this deep dive has certainly been an eye-opener.
Okay.
We've covered so much ground,
We have.
from the basics of ETFs to exploring these more complex strategies and even touching on some of the riskier ETF types.
And throughout this journey,
Yeah.
the key takeaway has been the importance of knowledge
Okay.
and informed decision-making.
For sure.
ETFs can be powerful tools for building wealth.
Right.
But like any tool, their effectiveness
Yeah.
depends on the skill and understanding of the user.
So as we wrap up this ETF adventure,
Okay.
what's the most important question our listeners should be asking themselves?
Given what you now know about ETFs,
Yeah.
how can you use this knowledge
Uh-huh.
to create an investment strategy
Right.
that aligns with your goals,
Okay.
your risk tolerance,
Yeah.
and your time horizon?
Okay.
Whether you're a buy and hold investor or a more active trader.
ETFs offer a world of possibilities.
do.
The key is to approach them with a well-informed and thoughtful mindset. Wonderful. So much to learn.
Yes.
So much potential. Thanks for joining us on this deep dive into the world of ETFs.
Of course.
We hope you feel empowered to explore this exciting investment landscape
Yeah,
and make informed decisions that help you achieve your financial goals.
exactly.
Remember, keep learning, keep exploring,
Right.
and as always, happy investing.